We're back. I'm Ed Milewski, my host, Ben Smith. We just talked to James West live from California. Yeah, the thing that's interesting here going forward, there's been a lot of companies going public, but not all the shares are free trading at that time. For instance, I know in this CURA, a lot of that stock that was just bought through, Canaccord, GMP, whatever, that's tied up for 4 months in a private placement. Now, if we go back, 4, 5, 6 months ago, there's companies now where all of a sudden there's going to be a lot more shares trading, and I think one of them is the Green Organic Dutchman.
Yeah, the Green Organic Dutchman, they had earlier private placement rounds that were held at $1.65.
Right.
They are now expiring 6 months from the IPO date, which took place on May 2nd.
Right.
So this Friday is November 2nd, and about 100 million shares will be coming on board. So there's some latent selling pressure, perhaps, there.
We're having a mic issue here.
We got a mic issue?
Yeah, not a Fred issue.
Not an issue, Ed issue?
Mic down, mic down.
Yeah, man down. It's on mute.
Oh, it's on mute.
Yeah. Keep that on the outside, like you clip it like that.
Okay.
Good, fellas.
Okay.
No more Ed issues.
No more. No. Yeah. So if a lot of stock comes free trading, and look, it's a lot easier, and I hope I'm not saying something that's so blatantly obvious. I don't want to be Captain Obvious here for on this segment, but like when there's more shares outstanding, there's a lot more traffic. When there's a lot more traffic, the moves become not so significant. And if you're, again, a lot of times motivation to sell is just based on, hey, I bought it at X, it's now 3X. You'd be crazy not to take some money off the table. I mean, the whole idea here is to take money off the table in a prudent way, especially in an area where the fundamentals, I don't think, have caught up to the valuations. That's how I would. So I'm not saying, well, be careful, but maybe you're going to start to see some heavier selling here in TGOD over the next, as we get into Friday.
Well, I think the TGOD situation is very similar to what Aurora Cannabis faced when MedReleaf, after that deal closed,
right, as
well. I believe there was something around 350 million shares that were completely unrestricted from the time that that the transaction actually closed, that were eligible to be sold on the market. So despite the fact Aurora already had about 620 some odd million shares, that was an extremely high amount of shares to be coming online at once. So
yeah.
If you look at the chart leading up to that point, Aurora Cannabis was definitely weaker than the market, considerably weaker, and it had gone down, and I think it was an opportunity for perhaps some short sellers to pile into the stock in advance of an anticipated situation where they could smell blood in the water. And TGOD is much the same way. I mean, the broad market is since October 15th is down about 34% as judged by HMMJ, the ETF, and TGOD's down about 64%. Sorry, since September 20th. So I think we're seeing some front run selling, and after a period of time, maybe 2 to 4 weeks.
Sure, but the shares are still out there. It's not like shares are going to be taken away, and it's going to be easier to, once these shares are out, they're out. Someone owns them, and if you sell them, someone else owns them, and it's not like they go away. But your point about Aurora, I distinctly remember a few months ago saying it seems to be a bit of a laggard here. Like it's not acting. You get more action out of Afria, you got more action out of weed. I mean, it did go, but it didn't stay up very long, did it? Like it sort of ran up to 15, 16, and here it is back to $8.
Yeah, and I think that also highlights the fallacy of big float, small float that we see in the market sometimes. So a lot of retail investors like to blame large floats for when their stock doesn't really appreciate that much or lags some of their peers. But as we saw with Aurora Cannabis post MedReleaf deal, there's 1 billion shares out there, and it ran recently, before legalization, it ran a good 150% in a 3 to 4 week span. So, and we also saw with Huge, FSD Pharma,
Right.
a couple months prior, it also ran from the 10-cent range all the way to close to $1 within a very short time frame. So, it works both ways with the big float situations. They can definitely move with the right catalyst. Irrespective of how big their float is. If there's the right catalyst and you have the right market sentiment, things can move.
I guys in the control room, if you can hear me, can we get this chart up of the S&P that I just put up on my computer here? Is that possible? I think it is. I just want to have a look at the S&P as a broad indicator of what's going on here, and this may not necessarily. Yeah, okay. So that is a 5-day chart. I'm going to put up a 1 month here, or say a 3-month chart. Yeah, I'll put up a 3 months. I want to sort of just go through this a bit because, we saw here. Oh, nothing falls out of here. Okay. So here we are. We peaked here back in not long ago. Like this is about a month ago, I would say. Maybe 5 weeks ago. And look at that. That's a major drop. I kind of like this candle though here that we saw yesterday, and this last move.
Inside bar.
It really moved very quickly at around. I'm going to say around 3 o'clock, 3:15, when the Dow was down 500. So the S&P would have been here, and it moved here, and here we are with a green day, and I get a hunch so we're going to build from that. I'm not saying we got a major rally starting again, but we could have a good rally, and then we may have to test that again, which is often the case. But I'm saying that for the short term, I think the worst, based on the action I saw late yesterday, that dramatic move from down 500 to down 250 in what seemed like 15, 20 minutes, I think that might have put in a temporary bottom. And with all these things, these are all probabilities. I'm not saying, bet your life on this. What I'm saying is that's my observation, and there's there's a probability factor that I could be wrong. But anyway.
You know what? I think you're right. If I had to bet, if I was a betting man and I had to pick a direction of where the market's going to be in the next 3 months, I would actually say probably going to be considerably higher.
Yeah.
The reason being is that I don't think we've seen the blood on the streets yet. For people who remember the tech bubble, in which I traded heavily at the time and participated in, there were a few harrowing drops all the way to the top. And usually such market events climax with a real can't miss sort of move to the upside, where it's just it's no holds barred, it's indiscriminate buying, and that leads to sort of like the last euphoric sort of move. I don't think we've seen that in the S&P yet.
By the way, I've changed the chart there, Ben, to a 1-year chart, and we had this big move. That was, oh God, I can't.
Very similar to what we're seeing
now.
Yeah,
well, almost about the same size a move, right? And then we had to look at this rally, and then a test, and then it went on a pretty good, like there's a defined trend there with.
It's just another buying opportunity.
Yeah. So look, if you're going to go into the market, you want to be going in. You'd rather be going in here than here, right?
Yeah, and you know what? I would also. There are some supporting factors for this as well. I mean, I don't think you've seen gold really make a very strong move. I mean, you've heard some chatter about gold at 1240 being some sort of technical level. It isn't. Not now. I mean,
you know what? I have to agree with you. Like I'm a bit of a gold bug, and I have not really been in golds, although I thought we were going to have a move in May and it didn't happen. So I thought, you know what, until I start to see something a little more compelling in terms of a technical indicator, I'm just sort of saying I don't think it's going down anymore. I think it's going sideways. Okay, like I think it had a big run up until 2011, I believe.
Yep.
Had a major correction up until about 2.5, 3 years ago. And now we've been sort of, moving sideways,
drifting.
And again, some of the great market players, one of the adages is, buy to the sounds of sell to the sounds of trumpets, buy to the sounds of cannons, and certainly the cannons have been blasting. So if you're going to put some money into something, there's some deals out there.
Yeah, I think so. And consider also, the fact that 2s and 10s on the yield curve are still positive, right? So the yield curve hasn't inverted yet, which makes it more profitable for banks to lend long term than short term. So, I mean, the spigots of finance haven't really, for these huge capital projects that drive the market, haven't really, reversed yet, because the yield curve isn't inversed. I don't think we've had a recession since about the 1960s where the yield curve hasn't inverted. So it's called the last 6 or 7 downturns in the market. And there's no reason to think that, the market's just going to suddenly collapse until, 2s and 10s start inverting, in my opinion. And then you start seeing gold perhaps, make a much stronger move than it's been making. You're not talking about $100 off the low. We're talking about a lot more fear than that.
This is a 5-year chart of the GLD, which is the big ETF in the U.S. And this tracks gold almost, right on. And if you could look 5 years, so you get big swings, but they're back and forth, right? Like this is the bottom that I was referring to in I think it was December of 2015. And look at this move. I think it was about a $350 move in bullion in about 3 or 4 months. And all the juniors came to life, and everyone was, yeah, this is it, this is it. But it was just an opportunity to make a good trade. Like, and there's some gold issues that. So here we are, and then we came back here, and I kind of like this not going as low as this one. So it's a sideways action with some good moves. ABX, I believe. I just want to put up ABX quickly because it's one of the big ones. American Barrick. Well, yeah, it doesn't look that big because that's a 5-year chart, but let's put up a 1-year. Yeah, so look at this. And I can't read these things because the numbers are but we had a nice little double bottom here, and then look at that move. That's all here in the last. Certainly you've done better here than if you were in the big cap stocks, in the FANG stocks, or the ones that dominate all the most of the activity.
But there's nothing that screams recession or screams anything out of the ordinary right now. And you know what? Until that starts happening, and I think the economy, we're at one of the longest cycles in history, it will reverse. And I believe that there is a lot of potential for the economy to get quite hairy, if you want to call it that. But gold, in my opinion, is not going to be, you want to be buying gold stocks, the most levered, junior explorers and miners heading into a recession. Till that recession comes, and then you start to have that central bank coordination in terms on the monetary side, and you start really having that fear of where the economy could go, that's going to be the catalyst for gold. I just don't really see it in the chart right now. I could be wrong, but I don't see it.
You know what? I always say one of the reasons why I like charts is because the first thing that tells you that something's moving is the price. Like, and if you're talking like macro events, or you're talking about potential news, until you start to see buyers go in there and move that price, there's no reason to get too excited. Like, and that's what happens. Like if I call you up and say, hey, take a look at this, and you look at it and ho hum, it's not moving, there's no volume. What's the but if you start to show volume and you start to see a break in a pattern, it brings people in. It brings people in, and as we saw in the I'm going to put up the ETF on the marijuana, on the HMMJ, and just see how this looks. Okay, just bear with me here 1 second. Yeah, I'm going to put up a 2-year chart.
This is HMMJ?
HMMJ, which is the Horizon ETF for the marijuana space.
Yep.
Bullish. In other words, if you're long. So look, major run here, and that would go back. This is a 2-year chart, so that was about a year ago, which corresponds to the end of last year and the early this year. Major corrections. Nice tests here. Big support in here, right? 1, 2, 3 times. And then launches into the stratosphere again, tying into the legality of cannabis, which happened, what, 2 weeks ago, 2.5 weeks ago now?
Yep, about 2 weeks ago. Yeah.
And then, but then, look, it's like, you know, like a lot of mining companies, the day they go into production, they fall off. So here we are, it's now legal. We're beating, you know, watching it, we're counting off the time, and all you get is kicked in the you know what.
But you know what?
Sorry, Ben, but and so far we're holding here, sort of like to be held in here. Anyway, sorry, go ahead.
Yeah, no, I was just going to say that that's why it's probably a really good time to buy for longer-term investors. Now, there could be some period where a back-and-forth consolidation. I wouldn't think that things are just going to scream up higher now, since GMP Securities lowered earnings on canopy growth, and de facto the sector at that point, right? So there could be some, you know, the valuations are very forward-looking. The earnings are probably not going to be there, and the revenues expectations aren't going to be there for a couple quarters. So, you know, it may not scream higher, but if you're looking from more of a long-term investment point of view, you know, we had Todd Harrison on the show the other day in an interview, and he said that the wellness industry is going to be a $2 to $3 trillion industry in 10 years. So if you have a long-term horizon, it's really hard not to, you know, kick the tires on some of your favorite LPs at this level.
Absolutely, absolutely. You know, and I mean, again, if you want to try and buy these things, that if the ones you like, as cheaply as possible.
Absolutely.
So I'm going to go, and now I'm going to go to the Midas Letter indices for a minute, which is going to take me a second, and I'm going to just see where, if there's any trends that are different from. Okay. Midas Letter. Okay. Back. Go back. Here we go.
So you're looking at the large caps, or the?
Yeah, no, there's 4 different indices here, and it's a little hard to read. Your eyes are probably better than mine. So the big caps are up 3% today. Those are the largest cannabis companies. And we got a modest decline here in the Midas Letter Small Cap Cannabis Index, and a modest bump in the Canadian Venture Cannabis Index. So no real damage, and nice little move, 3% in the larger ones. So that's your weeds, your Afrias, Auroras, enjoying a pretty good day today.
Well, I think you would expect that too in the bottoming process, when the market's sort of hollowing out and there's some give and take action. The money flows are originally going to first come in on the higher quality names. So that is consistent to what I would expect to see, sort of higher percentage gains on the large cap side, and maybe a little less as you go down the food chain to the mid caps and then the smaller caps. So
sure.
Yeah. So it's probably, I would say that the market's probably making a bottoming process, although it may not be at absolute lows. That depends on the broader market as well. But yeah, this is nice bottoming action I think we're seeing today.
So we're going to switch gears here for a minute, and we're going to talk to or hear James West again.
Sounds good.
Hello, everyone. It's Milewski here, Midas Letter Live. I'm joined today by Ben Smith. Ben and I have not been on the set yet together, but we've talked a lot by Skype. Nice to have you sitting in front of me in the flesh.
Thank you, Ed. It's great to be here. I love being in studio.
Yeah. So quite the volatility in the world, eh? Like the last, couple weeks. I mentioned Amazon earlier, dropping from $1 trillion company to 3/4 of that basically in a month. That's. It happens to smaller companies, but when you're talking about a behemoth of Amazon stature and statue, are these guys here? Oh, I didn't know that. Hey guys, how are you?
Hello, Edward. Hello, Ben.
Ben. Hi, James.
Hey, they just say start talking. I guess I should have looked to the right.
There you go. And here we are.
We are.
So I see you guys must be doing some buying in the market. I see lots of recovery in the large cap cannabis sector.
Oh yeah, that's us doing it.
The index is up 2.5%.
You know, I noticed something yesterday afternoon, and I was deathly ill. But the Dow was down 500 points, and they took it from down 500 to down 250 in a nanosecond. And that move is so fast that I'm going to go out on a limb and say that maybe we've got a market bottom in place for a while. And in the big markets, which I think will spill out into the cannabis sector, because everybody's sort of, what's going on? What's going on? And it feels like other bottoms where there's lots of pessimism. So, yeah, that's us buying in the market, moving it up. Absolutely.
Well, that's interesting, Ed. You know, I'm looking at some of the stocks that have sort of staged a bit of a rally here. Aurora Cannabis up 44 cents to 8.14. Afria tacked on 75 cents, now trading at 13.52. Kronos Group up 20 cents to 9.19. And of course, the bellwether of bellwethers, Canopy Growth Corp, is now up $1.55 to 45.03. But, you know, looking at these moves, I've also seen all of these stocks dip below into the red today. And so there's still lots of volatility. But if you were to sort of look at the chart of the last few days, I would agree with your assessment that we're looking at a bit of a consolidated, you know, short-term bottom here, pending some other major to the or some major catalyst to the upside. So, you know, the volatility in this particular cycle, and by cycle I mean post-industry-wide catalyst, i.e. the acquisition of Canopy Growth by Constellation Brands. That's, you know, it's the same pattern that we saw after they announced legalization, after the first acquisition of 10% of Canopy by Constellation Brands. So this sideways drift is now exacerbated by the fact that there's a lot more money sloshing around in the market since these companies are now trading on the NYSE and NASDAQ. And that's the main differentiator here. So you've got your usual assortment of mainstream financial talking heads crying, Chicken Little, the sky is falling and time to get out and the bubble has blown. And it's like they really don't understand the fundamental long-term nature of this medical for cannabis globally are at this point, as our good friend Sean McNulty says, we're an inch into a marathon. And so, you know, I think that this is a buying opportunity right here. This is a chance to, you know, you're buying Canopy at the same price Constellation bought it for, more or less at these levels. You're buying Aurora before, you know, it was at the front end of its run to $15. You're buying, you know, even Organigram is down there trading in the 540, 560 range. You know, that's giving back everything it put on during the last sector-wide lift. So if we're going to, you know, sort of take bets as to which direction the market's going to go from here, it certainly looks to me like we're going to see some sideways drifting, you know, a little bit to the downside. I think we're going to still see volatile moves on an intraday basis, but overall, the chart is going to be more or less, you know, irresolute until either a major catalyst to the upside, a major catalyst to the downside. But I do agree that I think this is a consolidation here, and it's a great place to go shopping.
Yeah. Well, Ben, what do you think about that?
Yeah, no, I would definitely agree with that. I think yesterday the market was hit hard on the GMP securities, downgrading Canopy Growth's earnings for full year 2019, and due to production issues and so forth.
GMP did that?
GMP securities did that, and that's why the market, you know, had an extra down leg despite the, you know, the big sell-off already. So, yeah, I think this is a revaluation of the sector lower. But the fundamentals haven't really changed. I mean, if demand on the consumer side, on the adult use side, wasn't there, then I'd be a little bit more concerned. But these production issues are going to, you know, sort themselves out over time. Afria is going to be producing 250,000 keys by next summer.
And Afria is going to be listed on the New York Stock Exchange on November the 2nd, I believe.
That is correct, this Friday.
Yeah, okay.
Yep.
This Friday. There you go.
So, for investors looking to buy in, Canopy Growth is actually $4 or $5 less than the price Constellation Brands paid. So there's some great deals, no doubt, and the reevaluation is taking place.
Do you recall if GMP put a number on Canopy when they downgraded it? Did they put a target?
Yeah, well, they kept their buy, I believe, with a negative bias, but they kept their buy rating at $50 a share Canadian, and they brought down full-year earnings, I think, from like 480 down to 288, something like that, like 200 million, due to supply issues and due to a couple other things specific to the company. So no question that the earnings side may not be as robust as people might have expected in the last quarter of this year and maybe first quarter of 2019, but now the revaluation is here.
James, what's your take on the Curaleaf, which went public yesterday? And I know I just got off the phone with the guys at Canaccord in Calgary, and they said that the public paid $11.45 a share, and I think the first trade was under $9, which was
yeah, well, this certainly isn't the kind of market that you want to IPO into. I mean, we've got Acreage Holdings is going to be IPOing next week. We've got a whole bunch of new large-scale companies that are coming to market here. And, you got to consider that, especially in the context of the recent revaluation of the downside of the entire sector, that the capital pool has become quite finite in this current market. So people who would be, piling in on a rising market, especially with these companies getting sort of anointed with the wand of credibility as a result of listing on NASDAQ and the NYSE, there's not so much enthusiasm around that anymore. So, if I was one of these big large cap companies planning to go public by IPO, I'd be a little bit nervous about that right now, and I wouldn't be surprised if we even saw some delays. But again, with Curaleaf, I've got to stipulate from the outset that I'm not familiar with the company's business. I don't know what their financials look like. I don't know what the valuation is. I don't know how the capital structure was built. So at this point, I don't have an opinion. As you know, I'm more focused right now on documentary filmmaking in beautiful Carmel, California, with my good friend Justin B. Marshall here. Also, our West, and we're going to be, talking to them in the next 24 hours about some of the opportunities here in the U.S. market, in the California market. Now, Justin, you were telling me last night that there's a real sort of separation going on here in the California cannabis scene between those who can grow organically and without pesticides and get through the stringent California state testing rules and get their product on the shelves in dispensary. And then there's another component of the market that is perhaps not able to achieve productivity outputs without the use of substances that might exclude it or prevent it from being approved for sale in the dispensaries, especially as it pertains to medically. How California investors looking to invest in the cannabis complex in California?
Well, that's a great question and a very good point. James, I would say that right now I believe an investor should look at a company in California that has an organic initiative, someone that's leaning towards the organic side. I was very impressed with Organigram leading this direction. Even though it's only 5% of the production, it's still a move in the right direction. For patients, it makes the biggest deal in the world. For a medical patient consuming cannabis to fight disease, you want something that's pesticide-free. And whether you're making an oil or whether you're making or just smoking the flower, you want something that's pure. And it's very easy to grow, even at scale, organic cannabis. It just costs a little bit more, and your yields are a little bit lower. So with that in consideration, you can make that investment as a cannabis farmer and go for what the consumers really wanted, and that would be organic cannabis.
You bet. So are there some sort of private opportunities that in the cultivation space that might be looking for capital to sort of take themselves to the next level that they can't readily access in the United States due to federal prohibition.
By all means. By all means.
Right, and we're going to go visit some of those people, aren't we?
Indeed we are, James. Indeed we are.
Yeah, so one of the reasons that, I mean, among the many reasons to come and visit Justin is this idea that there's a lot of opportunity in California yet remaining. There is this great bifurcation of companies that can grow organically and get product through the testing process and on the shelves in the dispensaries versus those that can't and might be having to resort to alternative methods of sale and commerce. Those are the companies that we're not interested in. We're interested in finding the companies whose balance sheet is going to pass the sniff test if it's going to be the recipient of venture capital from Canada. And so that's really kind of the opportunity down here that we're exploring.
Yeah, sounds interesting. Sounds interesting. Enjoy the nice weather while you're there.
Yes, we will, Ed. If I had my druthers, we'd move the whole studio down here tomorrow and we wouldn't go back home until like April.
Okay, let's talk about that.
Yeah. You guys mind coming down here? We run the studio and the show from California for a few months.
I'm in.
What about you, Ed? Come on, you want to come down here? Do a little surfing?
Yeah, I don't know about the surfing.
Well, it's easier for shark bait as long as you swim slower than me. We'll go swimming.
Some great golf courses.
Yeah.
And there's great golfing here, actually. The place that I'm camped out at just across the valley has a beautiful course.
Yeah. So when you're back here in Canada?
I will be back there tomorrow evening. I'll be back in the office, in the studio, on the set on Thursday.
Yeah, good.
Unfortunately.
You know, I was just on the elevator and I just noticed someone, some of the news that was flashing on the screen saying that some Canadians who said they were pot users were denied entry into the United States. Does anybody know more about that? Is that a recent thing?
Heard about that news, but yeah, it wouldn't surprise me based on what
you wouldn't want to say you were a user of marijuana if you're going to the U.S., right?
It would be something I probably wouldn't volunteer at the border, no, but...
Yeah.
I'm a user of CBDs on a somewhat daily basis, and there's nothing illegal about CBDs derived from hemp on either side of the border at this point, so not an issue. It's still illegal to cross the border with any sort of hemp products in your luggage, but bringing hemp products to Canada is more or less like bringing snow to Tuktoyaktuk. Who the hell would do that?
Yeah, there you go. Very good.
Tomorrow, Edward. Thanks for having us on today, and we'll look forward to talking to you on Thursday.
All right.
All right. Bye, guys.
See you guys.
Bye, guys.
Bye, Justin.
Bye, Ed.
Well, it's always great to hear from J&J, Justin and James from the West Coast. You know, mind boggles me how many people live in California when you think about how many. It's just like what, the 6th or 7th largest economy in the world. It's their own little, whatever, right? Playground.
Yeah, 5th largest economy, I believe. $2.7 trillion in GDP. It's really amazing.
It is.
Yeah.
So we had a new issue yesterday with Curaleaf, and there's another one coming very soon, Acreage Holdings.
Acreage Holdings, yeah.
And you know a bit about Acreage Holdings, don't you?
Yeah, we've written about it. I've written about it on the Midas Letter, I believe, on 3 occasions. And what's caught my eye the most is their unbelievable board of directors. Now, I've never seen a board of directors that strong from any company.
So this is public information, obviously.
Oh yeah, it's public information.
So who's on the board? Give me some names.
Okay, so it's sort of a mixture between 2 top private executives or public executives,
right,
and 2 top private and some government figure executives that are going to help navigate the legislative field. So a couple weeks ago, the Acreage brought aboard Brian Mulroney, who of course is the former Prime Minister of Canada.
Sure.
So he was brought directly to the board to and he joins John Boehner, who is the former Speaker of the House.
Big name in American politics.
Right. Oh,
Wow.
it's one of the biggest positions in all of government, being Speaker of the House, sitting Speaker of the House.
Yes.
And they also have Bill Weld, who is the former governor of Massachusetts. So in combination
Wow.
with the...
So there's some horsepower there.
Yeah, that's just on the governmental side. Now on the corporate side, they also have former Chief Financial Officer of IBM Corp. His name eludes me at the moment, but they have him on board, and they also have the former CEO of TW Telecom, which used to be Time Warner Corp.
Wow.
So to have these 5 people, and
Yeah.
of course, CEO Kevin Murphy.
Yeah. What about? I don't know Kevin Murphy. Is he American?
I believe he's American, and I believe he was managing over $1 billion of money for a hedge fund or a fund based in Connecticut. So, when you look at the totality of their entire board, I mean, most public companies don't have that kind of sway, let alone, a cannabis company just making its debut on the CSE. So it's no wonder that they've been oversubscribed from what I'm hearing, and, interest is through the roof.
Now, yesterday, Curaleaf went public, and I didn't know much about it, but I knew some guys at Canaccord. Anyway, I believe that the private placement was done at 11:45, and so that's it's a 4-month hold to qualified investors, and I'm pretty sure the first trade of the day was under $9. So that was a departure from like when we saw deals go public. Now I do think Tilray came out at 17. It never traded below 20, so it was at a premium all the time,
the whole way through.
But it's interesting. I don't know much about the business of Curaleaf. I believe they're in 12 states, all U.S. I think they're annualizing about $30 million a year revenue. But again, the valuation. I mean, I don't know if it's a function of the bankers. I just wonder if the bankers knew that they were going to do it at 11:45 and the first trade's at 9. I'm sure they wouldn't have never done it at 11:45. So, and maybe it's the market has got the general market has something to do with this.
Yeah, no, the general market has quite a lot to do with it. As you can see, there's been that revaluation to the downside with the cannabis sector in general, with with earnings perhaps not being there as once anticipated in the fourth quarter of this year and the first quarter of next year. So it's just a byproduct of that.
I'd like to know how many shares in Curaleaf are free trading, because that funding that was done is all stock that's tied up. So it's a little easier to move. And if you look at and I'm watching this thing pretty closely, it's a good trader. There's often 15 cents difference between the bid and the ask, which is pretty healthy spread. And I guess our Fraser Toms, who was enjoying himself in California, and he's back here today, interviewed the CEO of Curaleaf Holdings. So let's hear what he had to say. Okay.
Hey, welcome to Midas Letter Live. In this segment, we have the CEO of Curaleaf Holdings, Inc., trading on the CSE under the symbol CURA, C-U-R-A. That's Joe Lusardi. Joe, how are you doing today?
Great. Thanks for having me.
Yeah, no problem. I mean, your company right now seems to be the talk of the town with the biggest ever reverse takeover on CSE history. Why don't you just give us a general overview as to your company and the assets that you have going on right now?
Yeah, sure. So Curaleaf is a U.S. vertical cannabis operator. We operate in 10 states presently, and we'll enter 2 more states this year. And we are vertical, so 90% of what we cultivate and manufacture, we sell in our own dispensaries. Our footprint extends on the East Coast from Maine down to Florida. We also have some operations in Arizona, Nevada, and Oregon. And we are trying to create a national brand in cannabis. We want to be the most significant retailer of cannabis in the country underneath the Curaleaf brand. And as you point out, we are really pleased to say that we've done the largest equity raise in U.S. cannabis history. We've taken capital from over 100 institutions around the globe, and we were excited to put that money to work to create a tremendous amount of shareholder value.
Great. So one thing I was wondering is if you could comment on the share structure a little bit. So how many shares out, and what's the float looking like right now, if you know?
Sure. So we have 458 million shares outstanding. And Christine, what's the float?
508.5 million on a fully diluted basis.
508 million on a fully diluted basis. And we raised 400 million at a $4 billion pre-money valuation.
Okay. So in terms of management, US, okay. In terms of management ownership on a percentage basis, can you comment on
Yeah,
on
sure. Yeah, happy to do that. So our executive chairman, Boris Jordan, owns about just under 40% of the business. And then we have a couple other shareholders that own close to about 80% of the business in total. Management has 10% of the company, and then there's about 10% that was owned by some early angel investors in the company, which was previously called Paliatech. And so that's really the cap table. And then we just floated 10% on the street at 400 million. So that's how it all breaks down.
Okay, so that sounds good. I just wanted to get you to comment on your brands for a minute here. You've got some hemp interest as well as Curaleaf, which is the mainstream cannabis brand. Why not just give our viewers an overview of what the branding situation looks like for Curaleaf?
Yeah, so I mean, Curaleaf today is 98% medical cannabis, and so we're very much a THC company, if you will, or THC CBD, grown under state compliant medical marijuana laws. But we have just recently also launched Curaleaf Hemp. That's our new CBD line, and that product is manufactured using isolate grown in Kentucky and Arizona, and that's a nationwide CBD product that we're going to be launching here imminently this week. But the vast majority of our business today is in the medical marijuana space under state regulated programs.
Okay, I also see here UKU Craft Cannabis. Is that?
Yeah, so Yuku is our wholesale brand, and so we just launched that out in Oregon. It's a bit more of an edgy brand. It will likely be used in a wholesale context and also as we go into adult use markets, and so that's a little bit of a different brand that we'll roll out. It's a craft cannabis brand.
Right, okay, so I can see looking forward that you guys have a lot of planned expansion in terms of dispensaries. So what does that look like in terms of what you're growing? So maybe give us an idea of how much cannabis you're growing, and then from a retail perspective, is there partnerships that are existing for you guys to kind of fill out those stores?
Yeah, so we're vertical. We have 600,000 square feet of operations for cultivation and manufacturing currently in operation. And so we have a very significant operational capability where, because we operate on the East Coast and in most states that we operate in, for example, in Florida, New Jersey, New York, the vast majority of what we sell in our stores will be our own products, not somebody else's. There really aren't wholesale markets in those states. And so we're very much vertical, and we carry the Curaleaf products in the Curaleaf dispensaries. And we have licenses to open up 69 dispensaries throughout the end of 2019 across all of our states. And so we are very rapidly opening up dispensaries across the country. We'll open up another dispensary here this week in Florida, and we're trying to open almost one a week between now and the end of the year. So we're really putting down a very aggressive dispensary network to create access to cannabis.
Okay, so in terms of a state-by-state basis, where's your biggest presence? And then also I'd like to find out if that correlates to sales. So in other words, if you're go ahead.
I'm with you. So Florida is our biggest footprint at the moment. So we have 13 stores open in Florida, and we'll continue to open up stores in Florida through the end of the year. And Florida, as you know, is one of the fastest, or if not the fastest growing cannabis market in the United States. So Florida's adding 3,000 to 5,000 patients a week, some weeks. And so we're very excited about that opportunity. Our Florida license allows us to open up 35 stores in that market, and so we're very aggressively putting down a retail footprint across the state. We do also offer next day statewide delivery in Florida already, so we have a presence throughout the state of Florida, but we'll continue to fill in the map with dispensaries through 2019 until we get to 35.
Okay, and then so looking ahead at some of the catalysts, strategically, where do you have your eye on in terms of expansion, and where do you see the biggest opportunity?
Well, we've been very focused on highly populated states, and we like the limited license, highly regulated framework that exists on the East Coast. We think that it creates a balance between the supply and the demand of cannabis and creates more favorable economic opportunities. And so we'll continue to look at limited license markets. We've got a very full M&A pipeline, and we're keeping an eye on markets like Ohio, Illinois, and other highly populous states that have nascent cannabis markets where we think we can go in and execute our business plan and create shareholder value. So, we'll continue to put down money and do accretive acquisitions that allow us to create value for our shareholders.
So, understanding that you're, U.S. focused, what do you think the best case scenario would be politically, and what would that do for your company? So, in other words, if moving into the U.S. elections, if cannabis becomes a focus and it's something that looks like it could be legalized federally, just give us an idea how that would change your business.
Well, we support the States Act, the Gardner-Warren bill, and we've been very vocal in that we need to get a resolution between the conflict between federal and state law, and so we think the States Act is a very logical step in the right direction. What gives the states the ability to create their own marijuana policy, and so that's what we support. And we think that if that happens, that will open up banking in a more meaningful way. It will likely open up the debt markets in the U.S. right now, which really don't exist in any meaningful way. And so we think that that's a good, step in the right direction for the industry in the United States.
Okay, and if that were to not happen, moving forward as a business, how much would that get in the way of your progress, or do you think you'd be able to accomplish your goals anyway?
Well, we're going to continue to operate under state laws, and so we'll go into markets state by state and put down an operations that's fully compliant with state laws. And so I don't think it will impede us from rolling on our business plan, but certainly it would make it easier to do. As I said, I think, if the States Act passes, one of the biggest impacts will be to open up the debt markets to these operators, which I said don't really exist today. Debt is very expensive, and so I think if we can get our financing costs down, that will allow us to grow even faster and create more shareholder value.
Great. And just last question for you is, you guys are entering the public scene with the IPO valuation of $4 billion, if I'm not mistaken. So, correct. Yeah, for investors out there that are looking at this company, what's the value proposition for them looking forward so that they can feel confident in investment in Curaleaf?
Yeah, I think if you look at Curaleaf, we'll publish some earnings here in a couple of about 30 days, but we're growing this company at a 300% clip on the top line year after year, and so this is a high growth company. We're extremely focused on creating not only revenue but earnings. We think that that's an important factor in evaluating a business, and so we intend to create a lot of top line growth and drop a lot of money to the bottom line, and we think that will create shareholder value.
Sounds good. Well, I think we'll leave it there. Joe, thanks so much for joining us today.
Thanks for having me. Appreciate it.
Well, quite a story, quite a company. I'm going to do some work the next few nights, going into some of the filings and just take a look and get an understanding of what the structure is, because for a company with that many shares, for the next few months at least, there aren't that many shares, and it can move around pretty easily. As we saw yesterday, I think it traded as high as about, excuse me, $10 and as low as $7. And I know it had a pretty good day today. So let's see what happens. Now, staying on that same theme of cannabis, it wasn't long ago that Tilray went public at $17, started trading at around the low 20s, and then within a few months shot up and hit $300, and it was a blow off top. Might have been short covering, might have been, the
HFT driven
high
liquidity
exactly.
squeeze.
Whatever the reason, it's under $100 today. So quite a round turn. Our Liz West found out, what's the interest with Tilray? So here she is.
It started off as an unlikely player entering the crowded cannabis space, but Tilray caught market watchers off guard when the price of its shares skyrocketed to over 800% of its IPO, making it the largest cannabis company in the world almost overnight. Most experts agree that this massive increase had something to do with a small float.
So small float is typically when you've got a publicly traded company and only a small percentage of their shares are actually available to buy and sell in the market. The vast majority of the shares are typically held by insiders or founders or family members, depending on the type of business, and they have no interest in offering shares in the market to sell to generate trading activity, which leads to a lot of volatility because it's a supply and demand thing. If there's only a few amount of shares out there, for example, someone wants to buy, they're going to have to pay through the nose to buy it, as opposed to more liquid stock where it's easy to get in and out.
So, for example, a company that has, let's say, 100 million shares, if only 2 million shares were able to trade, and whatever's going on with that 2 million shares would impact the whole 100 million in terms of valuation.
In their initial public offering of $22 on the NASDAQ on July 19th, Tilray only released 10% of their stock. This led to a rise in their share price as investors only had a limited amount of shares open to them. By September 19th, it had shot up to $214, an 800% increase from its IPO. Since then, the stock price has dropped even below the $100 mark. So, are small floats a good strategy for companies hitting the stock market?
It's a double-edged sword. So on the plus side of things is if they announce something positive and people out there want to buy and get exposure to the stock, there's a frenzy to find shares because there's not a lot of shares out there. So there's like only 10 shares available at a high price. That's the price they're going to have to pay. The downside is if something negative happens and somebody who is a Tilray shareholder wants to get off their position, they're going to have to probably sell at all sorts of prices to get off it at lower and lower prices. So you can go down very quickly the same way you go up very quickly.
Unfortunately, it creates a false sense of what the company's worth, but we'll see. This is really tough.
And despite the volatility associated with small floats, it's a strategy that's becoming more popular.
I believe that we're seeing this pretty much across all the new IPOs, a relatively tight float to begin with, especially the US companies going public in Canada, where a lot of the shares are put into super voting rights and other types of convertible securities. So I think we better get used to these tight floats.
For Midas Letter Live, I'm Liz West.
Yeah, it seems like a long time ago Tilray hit 300, but I don't think it was more than about 6 weeks ago. And
yep,
it was wild. It was wild. But now that when the balloon gets a little pinhole in it, a lot of the air comes out. As time goes on, it becomes a little bit more forgotten. But still, monster market cap. Trading around 90 bucks a share. In fact, why don't we find out what it's trading at right now?
Tilray reminded me, for the first time in like 20 years, it reminded me of the tech bubble, the insanity. Because there's a lot of things that have gone up since 2008, since that recessionary trough, but nothing in that uncontrolled sort of crazy manner. Tilray was reminiscent of some of the exuberance in tech stocks, I think.
Yeah, and I don't know. Can you get this chart up, guys, of Tilray? Is that possible? Here it comes. And this is the 3-month chart. And I don't think it's been public for more than that, but look at this move here. We had a nice little test of this high, and it failed on a red candle. Forget about that. That may be something we'll never see again. Just because of the nature of bubbles and climax buying and selling. And then we roll over and we took out the low here, but it looks like and then I'm a little. Just looking at that, I'd say we may have more weakness to come here. Unless the whole sector stages a good rally. I know we tried today. We're positive, but there is a bit of a wick there. Any thoughts on? Would you be a buyer here, or would you be a seller, Ben?
Well, I think I would. There are other stocks that might be more appealing from a valuation perspective.
Yeah.
I know Tilray, they got a lot of good things going on as well.
Hard to buy a million shares of this one.
It's hard to buy a million shares of this one, yeah, for sure.
Unless you got an extra 90 million lying around.
Exactly, but you gotta remember it's also been shot over the past 10 or 12 sessions, and it's down from I think intraday high of about 180 to about 90 yesterday. So it's lost 50% of its value, or say a good 15% more than above and beyond the broad market as judged by HMMJ ETFs. So, would I necessarily be a buyer? Probably no more than I would with other stocks that I like perhaps a little bit better on the valuation front. But I mean, a lot of that excess is coming out of it, even though, who knows where it ends up.
We got a 3-month chart of the Dow in front of us, and very similar to the S&P, but there's only 30 companies in the Dow versus 500. But again, we got this big candle here yesterday. I kind of think, if we go out a little bit further, we're going to look back and say that may be a bottom for a while. Now we tried going down there, and we get into this big tail down here, and it came up, it opened in here, and closed near the highs of the day. So I think as a number, the Dow was up
400 points?
430 points. It's mind-boggling. I was going to say probably up 60, 70 points. You forget how big the base number is now, right? I mean, I was in this game in '87, the day the Dow dropped 500 points. And
you were there for Black Monday?
Oh yeah. I got in. I sort of paid attention about '77, and I've always looked at charts, and I've looked at gold because I knew a guy that made a lot of money in gold. Yeah, so I like that to me looks a bit constructive. I think what we need here is we need to see this line here get breached significantly, and then I think tomorrow's going to be a good day. The whole week should be interesting. I guess tomorrow's the last day of the month.
Yeah, from a broader perspective, the economy is probably weakening from some of the data that I've looked at in terms of global exports in different countries.
Do you think it tied to the specifically with the tariff wars, et cetera? I mean, is that?
Yeah, it's tit for tat right now, and it's broadening, but and there could have the ramifications could get a lot deeper by the time it's said and done. But also, who knows if the brinksmanship gets pulled back by both countries, and that ends up providing a tailwind, as we head into the winter. It's kind of hard to say, but I think overall the economy, U.S. economy on a macro level is slowing down from all the data points that I'm seeing.
Yeah.
And it's been running for a good 10 years now. So long-term investors have to be a little bit careful and really differentiate, sort of short-term trade, which could end up being new highs before it's all said and done, and just entering on a 3 to 5 year time horizon, because the economy will not be robust in the U.S. forever. That's for sure.
Okay, well, it's a green day in the big markets. One last look here. I want to just check the big cap. Let's put up weed here. Okay, there's weed, and that is 3 months. Okay.
Yeah, that's quite the chart.
I just changed that to 1 year. Okay, so you've obviously watched this one very closely for quite a while.
Oh yeah, I've written probably 3 dozen stories on canopy growth, including a lot of the technical picture. Most recently, the level I was watching and readers on Midas Letter would have understood the key levels were actually not the recent lows at 36.62 on CGC. The key lows, in my opinion, were the Constellation Brands rough buy-in levels at around 37.30 US. So there was a double low on October 25th and October 26th. And that was about $1 higher than the ultimate low, channel low of 36.33. So for me, that was the big marker, because if it were to lose that psychological mark, and there was clearly a lot of buying at that level the previous 2 sessions, then the bull case would have been quite bad. And of course, GMP Securities came out yesterday, lowered their full year earnings guidance, and that, specifically to Canopy and, de facto the sector. And that really hit it hard, and it lost that level very early in the morning and kept going.
This is where I think that was the day the Canopy came in here, or Constellation Brands, I should say, came in, back in here.
Yep.
And I remember talking to a pretty good trader, and based on that close, he said he thought this was going to 25. Well, then Constellation came out, changed that in a very, very remarkable fashion.
He changed that whole narrative, and today Coke came out today and definitively kiboshed the narrative that it was looking at to buy or partner with an LP to get into the cannabis space. So hopefully that sort of washes out the expectations that we're building in mid-September when these stories and rumors started to, circulate.
Maybe that's already in there now, right? Like maybe, how the market knows everything way before everybody else? Like, just when you think you know something new, maybe you're the last guy to find out. Like, if I know it, I figure everybody else knows it. That's what I think, anyway.
But you know what? It's got traders looking the other way and investors looking the other way.
Yeah.
Perhaps they're thinking that big beverage isn't coming into the space now. Maybe they're going to wait for the U.S. regulatory outlook and give it a couple months and see how that shapes up before making a big decision. And if we do get that deal, it could be akin to what happened on August 15th when Constellation bought that 5 million direct equity stake in Canopy, and it could reignite some spark back into the market, because all that talk of CannaBev partnerships is sort of dissipating right now, and people are starting to look at other catalysts, not necessarily those ones. So any positive, more than joint venture deal should exert a positive impact on the market.
Well, that's about it, Ben. We're gonna wrap it up. Thanks for coming on the show. We'll be back tomorrow. Hopefully, we got a guy coming on the show tomorrow who's CEO of a small mining company, but he's been stationed in Indonesia for 20 plus years, so he knows something about producing copper and some of the difficulties involved there. So anyway, that's it for Midas Letter RAW. I'm Ed Milewski. Ben Smith.
Ben Smith.
We'll see you tomorrow.